Welcome to Forex, and here we're looking at the US dollar. And quite simply is that, yes, we can have a top in play here, but the move down through here is more like it's in three waves. We noticed we had five little waves here, so we knew that we'd get another five over here. A little bit dodgy, but 1, 2, 3, possibly 4 and 5 to here. So look, it basically looks corrective to here. Secondly, this market's still in group 2 here, which is supported by group 2, which is a sign of strength. So while the market is above 80.72, then the bias is to the upside. In trading terms, the 80.80 as a tested support would see the market at 81 higher through here. So while this is above or within group 2 here, it really puts the euro still on the downside, and there's a couple of ways to count this particular structure down through here, but I think this is the best fit so far. So another move down into 135 or close to it here. Just on the 1 hour chart there. So look, coming into group 1, which is 135, 10, 20 and 30, you'll see the market get a bit choppy and bouncy and so forth, but the momentum is to the downside. And the wave count, this little retest that we were looking for here yesterday back into the midpoint 135.50 here, is corrective, so we should take this low out through here. The Australian dollar target at 94 has been reached, up through to here. You can see the market is now overbought zone. So the idea was to get to 94, take the money and wait. And so based on that here, there's a couple of variations for the count here, but we're still looking for a move higher above wave 3 here. It's just that we need to work with whatever type of correction comes from the 94. So if the market, let's just zoom in and have a little look here. So the normal process for working through a number like this would be the classic trading levels pattern, where we have the the arrival here, the reaction here, coming back into group 2, moving up into group 1 here, which would be the 94.30, 94.20 in this area 3 here to create the high, then looking for an ABC correction as such here. So look, whichever way we're looking at it, there's we have to we just basically have to wait. In fact, from this high here, it can pull back to the 38.2 retracement level, which is the wave 4 of 1 lesser degree. So it from here, it can work back down through to here. Because there's been a lot of price action through here, it'll be a bumpy ride through here. So I suggest that, take the money and let's just wait for some type of correction to unfold across this particular level through here as such. But look, that said, if you want to stay long, you just got to keep the stops out of the picture, basically, because yes, it will go higher. It's just what's going to come out of the gates at this level here is the question. So job done to 94, exit and find another market. The Euro Australian, as you can see here on the weekly chart, is still trending down, and we're looking at all of this being wave 1, and then a wave A, B and C here for wave 4 here. So we're looking for a low in here. It can come back to the 4th wave of 1 lesser degree here, but in this block here is the markets tend to mirror each sort of reflection. So moving down through to here is the support area through here. This is reflecting this, and of course the number here as well. So with that in mind, at the 144 here, which was our target in terms of it's a bit more of a geometry thing rather than anything else, but still it's a even number, and it's whole, and there will be support there. And how far will it retrace back? Well, this particular trend all the way down through here, if we looked at this here at from this high here, the 38.2 retracement level would actually be a bit higher up through here. But I think that we need to look at, realistically looking at, well, there's that level of supply here at 144.50, and also too, if the market finds support on 142.30, this number here, if support is, naturally it will just go back to this point, but in this space here anyway. But if support is found on 144.30, then you'll know you'll get to 144.50 area through here. So that's what we're looking at. But if we just drill into this a little bit here and have a look at this, it's on the 15-minute chart, we can see that we've got a little impulse wave up here, which is 5 waves, 1, 2, 3, 4, 5. Not always easy to count, so sometimes you just got to kind of look at something that you recognize. And in this case here, we can see a strong move here, so we could, assume that this is 1 and 2 here, 3, 4, and 5. So basically we're looking for an A, B, and a C. So if we look at this on a 5-minute chart, we can see that 5 waves a little bit clearer through here in terms of the 1, 2, 3, 4, and 5 here. So if we get 5 waves in the opposite direction after a correction, we're going to get another 5, aren't we? So we've got those other 5 that are coming into play here. So as long as the market realistically stays above that 144.10 here, then we'll be this, everything will it will still be to the upside. But the 144.10 is resistance. Then we'll have to look at this ABC pattern here, an A and a B and a C here being completed. So this little move here would be the, if that moved below the 161, which is 61.8, which is basically the closest largest number, the 144.1 here. If that became the retested resistance, then you know that this is likely to be completed here and will be working lower through the 144 at this point here. The daily stochastics are oversold at this point, so but the momentum is still to the downside, so we'll be looking at 143 once this fails at this level here, or once this corrective pattern is done and dusted. The yen crosses the pound yen and the euro yen. Excuse me. The pound yen here, we were looking for 50-60% retracement level down here for wave B. And I was looking at this as an ABC correction down here, and it could possibly be that, but it also counts quite nicely as an impulse wave. And as an impulse wave, that means that 5 waves down here would see a counter trend in 3 waves to the 50-60% retracement level, or back to the 172 here, and then another 5 waves down here. So just need to be a little bit careful there, but just this is my thinking, is that this move down here being in 5 waves as such, is down for 1, back for 2. This is the whole 3rd wave here being 1, 2, 3, 4, and 5 for the 3rd, then the 4th, then the 5th here. So we'd be looking at a 61.8% retracement level from this area through here. So that would put us in this little area through here, but can come back to this area here, can come back to 72, or maybe just get back to the 171, 72 area here, where this wave 4 of 1 lesser degree is. But we can see that the bounce is underway, and this little move down here is corrective. So support on 171.30, the top of group 1, would see it back up at the 50 here. So looking for a bounce. Don't particularly want to trade long into this here. If you did that, you'd need to keep the stops at 171.06 or something there, and then move them. Once the 130 becomes support, you can move it to 171.16 here. And then when the 50 is the support, then you can move it up to the 46 after it's been tested. The 50 is being tested as such, but the daily chart is still over sold, so overbought. So we're still in a toppy situation up here. I just suggest let's see this mature somewhat here, and let's see what we've got here. The Euro Yen, we were looking for a low below this wave 3 here. Now this could be wave 3 here or here as an A and a B and a C here, which is probably more fitting. However, it doesn't really matter for our purposes here, because if this is wave 4, we're looking for a wave 5, which will be below one of these lows here, and that's been achieved here. So we'd be looking at this move down here as an impulse wave. The question is this impulse wave finished? The momentum is still to the downside. It's not on the daily, it's not oversold, even though it's taken this low out here. So that's an important point too, to give it a bit more space to move down. But what we do have is we have this move here to 138. So 138's an even number. It's important. It's it's level 8. So look, but the same with any level here. What we can expect and what we should be sort of looking at is a range, and the range is this, right? So this is group 1 and group 2. This is the 138 will be the balance line, and this will be where the corrective range will come into place. Now, if support is found on 138.30, the top of group 1, then we're going up. If it can't do that, then we'll be going down. And to see some sort of move up here and fail, if it moves up into the 30 here and then finds the 138.20, the pivot within group 1 as the resistance, then you know that you're going to be heading down from that point there. So, but it's got to trade above that first and then lock under. It's got to be retested as well, because it can spike down to 138.16, 138.15 area and then find support on the 20. So you've got to give it a little time to mature to become support or resistance. Those tests are important. But otherwise, the momentum is down for this market, and we're just looking at some sort of corrective rally, from the around the 138 here. But the 138 as resistance here, then you can look further down through there. The 137 will become a strong number to work with as well. Alrighty, cheers.